All right. Well, I think we should get started here this afternoon. Thank you, everybody, for joining us here on another edition of the 27T Impact Series. My name is Will Ham. I'm the CEO of 27T Financial, and with me here today is Josh Alexander. He is the managing member of JoshAlexander Business Advisors. And I really appreciate him joining us here today to talk about financial controls and how to make them simple and effective for your business. What is the 27T Impact Series? So thank you for everybody for joining. For those that are first-time joiners of our series here today, what we're talking about and what this program is designed for is for business leaders who are looking to create lasting and positive change within their organizations. And really the goal that I have here is to bring experts in their field to explore challenges and opportunities in your workforce with your work, with your employees and with your organization to help create successful outcomes for your business. And, there's nobody here that I trust more when it comes to financial controls than Josh. And I'm excited to have him be talking to us here this afternoon. And through our conversations, a couple of things that really stuck out to me of why businesses should be, making this a high consideration for their business. First and foremost, I think when it comes to decision making, financial data is such an important tool to utilize, and without, the proper resources available to you, it's hard to make those decisions in real time. And then on top of that is, how do you mitigate risk? 43% of small business fraud is due to lack or missing internal controls, and that's something that Josh is going to be talking about this afternoon with us here. And I think that those two key components are, why Josh's expertise is going to be so valuable here for us today. So, meet Josh. For those that don't know Josh already, again, he is the managing member of JoshAlexander Business Advisors. He started his career on the audit side while moving to co-founding a successful local CPA firm. And I think really where we hit it off and, kind of had a mutual understanding is jumping out and starting your own business because, you're passionate about helping other organizations, and you know that your expertise is beneficial to growing businesses here in the greater metroplex, greater Dallas area, and throughout the country. And so I really appreciate you taking the time here, Josh, to present this afternoon. And I want to switch things over to you here. I'm going to pass control and make you the host.
Awesome. Well, is that appearing? Can you see that?
We're seeing it now. It looks like you're still in presenter mode.
Okay. Is that better?
Still looking like it's in presenter mode.
Uh-oh. Let's see. Okay. Fingers crossed.
Yeah, we still still in that
Sorry
presenter
about
mode right now. It's all right.
the tech issues, everybody. Bear with me 1 second. Let's see. Try something different.
There we go.
Perfect. Well, thank you, Will. Sorry about the issues, everyone. But as Will mentioned, my name is Josh Alexander, and I'm the managing partner of JoshAlexander Business Advisors. I have had the privilege of knowing Will for the better part of the past year or so. I can honestly say that Will feels like somebody that I've known longer than that, but in doing the math and looking back at meal logs and calendar events, I think it's only been about a year. But one of the things that jumped out to me pretty early on in our conversations is just a lot of the synergy that exists between our businesses, not only but also just in the way that we see business. And I know that Will is very passionate about providing forward thinking and strategic services to his clients. And that's a passion of mine as well too. And that's a reason why I'm excited to get to speak to you guys today. And so again, thank you, Will, for the warm introduction and for the invitation to speak with everyone today. So as a little bit of a bio about me, I am a Dallas transplant. And so what that means is that I am not a native Texan. I was raised in Michigan and somehow found my way in Dallas about 14 or 15 years ago. And through the course of time, have added a wife who is a native Texan and three small kids and a fourth coming in just a couple months. So at this point, Dallas and Texas very much feel like home, but this time of the summer, I'm really missing Michigan weather and all things that come with that as well too. So bear with me, but I'm adjusting and have adjusted to being down here in Dallas. So jumping in. So for those of you that maybe were signed up by somebody else and didn't realize what you signed up for, the title of today's segment is Financial Controls Made Simple, Protecting Your Business from Mistakes and Misuse. And again, this is something that I'm really passionate about. I've had a firsthand view over the past 15 years and working with hundreds of businesses and nonprofits. And so kind of what I've done is accumulate a lot of the kind of the best practices and maybe some of the deficiencies as well that I've seen in interacting with businesses and kind of digging deeper than just the numbers. And so I've accumulated a lot of that and tried to present this presentation in such a way that isn't financial controls is not the world's most exciting task. I'm probably one of the few people that really geek out about this stuff, but I'll try to present it in such a way that is actionable and that you can leave with 5 steps that you can implement within your business. And so this will be more practical than technical. I realize in a group of this size, there's probably people on every end of the spectrum. There's probably people that would say that all of the things that we're going to talk about today are things that you have had in place since day one or day two. And for those of you, I would very much congratulate you. And this is something, these things are things that I just see a lot of small businesses and organizations and mid-sized businesses too that just struggle with these. And so if you've got these in place, that is awesome. Please know that there's something here for you today too. And I hope you'll engage with us, especially as we get into some Q&A stuff. And then for those of you that maybe are on the other end of the spectrum, and a lot of the things that we talk about are things that maybe seem overwhelming because they aren't existent within your business. Just know that while this is a lot of information, that the most important thing is just that you get started and do something. And even one small change can make a big impact within your business organization. I think Will might have mentioned as well too, but feel free throughout the segment to throw any Q&A or any questions in the Zoom chat. And I know that Will be kind of moderating those throughout. And so throughout the presentation, I welcome questions and opportunities to kind of dig deeper, and certainly at the end of our time together too. Would love it if anybody brings any real world or examples and case studies that we can dig into, or any questions as well. Would very much enjoy that. So let's dig in. So again, just to kind of highlight what I mentioned, we'll cover why controls matter. We'll cover 5 must-haves to protect your business. And then where to start. I think one thing that I see most often, there are a lot of articles, there's a lot of publications about kind of best practices when it comes to controls and things that you should implement. But there's a lot of time there's a bit of a disconnect between the knowledge and how to actually apply it. So we'll kind of give you some tips on how to apply some of these things and implement these this week or today. And then we'll leave some time for Q&A, as I mentioned as well. So jumping in. So what are financial controls? If we're going to talk about this, it's important that we define and kind of set a framework for what exactly I mean when I say financial controls. So in layman terms, I would say that financial controls are the boring stuff that keeps your business safe from costly mistakes and fraud and misuse. And you might be wondering why there's a graphic on this slide of somebody flossing his teeth and seeming way too excited about it. As a self-proclaimed dental hygiene junkie and somebody that myself geeks out about all things flossing and water picking and things of that nature, I can assure you that I've never had a smile that large on my face while flossing my teeth. But kind of backing things up a little bit, I think there's a lot of parallels between this image and financial controls. And so I felt like it was only appropriate to have this image on this slide. I know financial controls it's not the world's flashiest or sexiest topic. And so just like flossing your teeth is something that most people, maybe outside of myself and our friend on this slide, most people don't geek out about these things, but flossing your teeth is important to your overall dental hygiene. You know, it's something that gets a lot of the things that fall through the cracks, literally, of your mouth, and without flossing, there's just no way to have proper and great overall dental hygiene. And so, in a similar manner, financial controls kind of serve a lot of the same purpose within a business. Without kind of the foundational controls in place, we can just have no expectation that any results or any numbers that come from our accounting records, our financial systems, that they're accurate on any level. And so I think there's a lot of interesting parallels between teeth flossing and financial control. So if you take away nothing else from our time today, financial controls are like flossing your teeth. All right, let's get in. So I mentioned that I've broken up the presentation into 5 actionable controls. So these are really outlined in no particular order. And the first control is segregation of duties. And this is a concept that financial roles and responsibilities, that they really need to be divided among different people in order to reduce risk. Put in other words, in other terms, if you will, is that there should be a system of checks and balances. We shouldn't have one individual within a business that's performing all aspects of a key transaction or a task. And so things like entering and approving or reconciling transactions really need to be split up among several different people, and ideally among people in different roles as best as possible. Management needs to be actively involved and have a pulse on what's going on. And even within a small team, there are tools and structure that you can use to separate duties. I know one of the things that I've seen most often and gotten asked is a lot of people that would just point out, hey, we're kind of a 1-man or a 2-person operation when it comes to the finance and accounting function. What do you mean we need to segregate duties? And we're already stretched thin enough as it is. And so to those people in the room, I would say, I would just encourage you to think a little bit creatively. And so I can speak pretty confidently that most people that might be stretched thin in that sort of capacity, that there perhaps are other departments outside of finance and accounting. And so there are many different tasks that can be done or outsourced, if you will, to somebody in a different department that doesn't require a CPA designation or a CFO behind your name. And so things, for example, like opening mail and entering a bill into a system, or preparing and printing a check for a financial manager or a C-suite executive to sign. Those are things that can be segregated and outsourced to others within other departments. So again, think a little bit creatively, think outside the box, especially if you're a 1 or 2-person operation. Another way that you can kind of separate and create a system of checks and balances is to outsource. And again, I understand with all of these controls that we'll be talking about today, that there's certainly a cost benefit standpoint to keep in mind. But again, I would very much encourage you and indicate that I'm confident that the benefits far outweigh the costs when it comes to these type of controls and having them implemented and designed properly. And so it could be a matter where maybe you outsource your accounting function to an outside CPA firm, or maybe you can't afford or don't necessarily need to outsource the entire function, but maybe specific tasks. I know for our firm, that's something that we've been doing. We've been working with a nonprofit here in Dallas for about the past 9 years or so. I have dating back a couple of firms ago too. And so one of the things that this nonprofit in particular, they have they have controls in place, but their board of directors from day one or day two just saw the importance of outsourcing key tasks when it comes to the accounting and finance function to an outside CPA and CPA firm. And so that's an example as well too. Moving on to the second control, monthly reconciliation of financial accounts. So this is the idea that our accounts need to be reconciled on a regular basis in order to make sure that our records match reality. Moving back a slide, I mentioned how, and kind of alluded a little bit that without controls in place, we can just have no certainty as to how accurate our records are. And so I was reading a LinkedIn post this morning that a friend who's also a CPA and a fellow fractional CFO that she had wrote, and it was a lengthy post about a lot of the stuff that we're talking about today, financial controls, and she was indicating that she often has clients that come to her and they'll say to her, hey, like our revenue seems way off or our profit, and we just, these don't seem accurate to us. And so she points out to them that most often the numbers are just a symptom of a deeper problem, and the deeper problem being that financial controls are lacking or were poorly designed. And so again, it's very important that things such as reconciliation of financial accounts or segregation of duties, like we talked about on the previous slide, that these are things that we're thinking about and implementing as we can. And so keeping with the current slide, so what should you reconcile? Well, I would recommend at a minimum kind of those key financial components of our operations, things like our bank accounts, our credit card statements, any sort of vendor balances that are significant as an example. And I guess I should probably kind of define what I mean when I say reconciliation. And so in simple terms, what I'm getting at when I say reconcile is just that we should be able to go to from a source document like a invoice or a statement showing a vendor balance at the end of the month, or a bank statement, for example, or a credit card statement. We should be able to go from the bank statement to the accounting system and reconcile or account for all the activity that exists in between. And I know there are a lot of accounting systems that make it very easy to reconcile your accounts. We work with a lot of the different accounting systems within our firm, but probably one that we use most often is QuickBooks Online. And I'm sure most of you are familiar with it, but if you're not, they make it very simple to reconcile your accounts, and to where you literally just go in and put a check mark next to the items within the accounting system that also appear on the bank statement. So again, what we're really trying to promote here is just the importance of catching issues early. And so keeping up with reconciliations on a regular cadence will really go a long way. And again, I recommend monthly. I've seen people that reconcile less often, maybe quarterly, but I think the benefit in reconciling monthly and having that standard in place is that any errors that might appear or arise, things like we have duplicate entries entered into the accounting system, or a missing income component, or errors or anything of that nature, we're catching those kind of transactions and those issues in more real or live time versus 3 or 4 or 5 months after the fact. So again, I would encourage you to set a monthly cadence to reconcile your accounts. If it's something that you're not doing currently, hey, that is completely fine. Don't beat yourself up about that. But I know today's June 25th. Maybe July 10th is the day that you perform your monthly reconciliation for the month of June, and then maybe it's a recurring calendar event that you're doing on the first Monday of each month, or second Monday of each month. And so again, put it on the calendar and make it a routine. Control number 3, physical and digital access controls. Prevent unauthorized access to financial systems, sensitive data, and physical assets. And so what I want to do here first is make a separation or a distinction, if you will, between physical and digital access. I know in a group of this size, I would imagine that just about everybody has some sort of physical access controls when it comes to their personal life, and certainly with their business as well too. And the same would be true from a digital standpoint. But when I'm talking physical access controls, more of the entry point security, things of that nature. Um, I think so oftentimes from what I've seen is that there's a very heavy emphasis placed on the controls that we see and interact with on a day by day, hour by hour basis, locks on doors, key card access for after hour access to an office suite, or certainly locks on our personal homes and cars and things of that nature, to passwords on our computers. But most often, if I were to ask a business owner about, uh, tell me who has access to your accounting software or to your online banking, a lot of times, more than not, the answer that I get is, well, I think it's employee A and B, and I'm not sure who else has access. And what I would encourage you, if you find yourself in that boat, is don't be content with just guessing and maybe having a loose understanding. But if it were me, I want to know who has access to my accounting software, who has access to my online banking. And so again, both from a physical access control standpoint and a digital being more, think software components and internal systems and things of that nature, and physical, obviously doors and buildings and things, but also to expand the definition of physical access controls, things like cash, obviously, or check stock. I think one of the things that I see most often too, and especially working with a client that I've had the privilege of working with for about the past 6 months or so, is just in kind of onboarding with them and asking them a series of questions just so that I can get an understanding of their controls and kind of where we would need to go from there and how to design things better. One of the initial things that I learned is that there were about 5 or 6 different people that each had their own stash of check stock. And so with that, the problem there was, especially for this particular client, they were really working in a remote environment. And so sometimes the employees would come into the office, sometimes they would work from home, sometimes they would run personal errands. And so I kind of dug deeper and asked questions, and come to find out that a lot of the employees would literally carry the company's blank check stock around with them, just like they would with their purse or their wallet. And so the check stock was going along with them and maybe staying in their car if they went to a family party, or if they're at home, it was at home with them. And so really we need to be carefully considering who all has access to things like check stock. And I know a lot of times it's more of a convenience thing that we can give an employee A access to a a wad of check stock so that we don't have to, so it can simplify our controls and our processes. But one, there should be a careful consideration of who all has access. And then for those that do have access, there need to be security controls around it. So things of that nature need to be kept in a safe and secure location, not in a location where any employee walking through an office or a family member within a home could walk around and access said check stock and write a check out of the company's account. Use role-based permissions and password protection where feasible, just to kind of simplify the access and approval process. And also too, as employees are being terminated or onboarded, make it a point as part of the offboarding or onboarding process to make sure that their access to such platforms is added or removed as applicable based upon their role. And again, if I could encourage you on anything here with this control, especially, I think a lot of times trust is so intertwined when it comes to the way that business leaders see their employees, that um, to kind of have a sense of skepticism is almost seen as though we don't trust an employee. And so I want to kind of separate those things and encourage you that it's not necessarily about trust, but it's about minimizing risk. And so for me personally, that's one thing that I told one of my clients when I came on over the past year in a CFO capacity, and in the course of getting access to the bank accounts and being added as a signer and an authorized signer, I told him and reminded him that I want him to always have trust in me, and that I am going to operate the company's finances much like I would with my own personal finances. But at the same time, I want him to never feel too safe and secure with me that he stops asking questions and stops checking the bank activity from time to time and keeping a watchful eye. And so that's something that I would highly encourage any business leaders or owners on this call is to trust, but to continue to maintain a level of professional skepticism and ask questions. Control number 4, documented policies and procedures. Having clear written processes creates consistency, accountability, and clarity. This, probably without a doubt, I would say, is the control of the 5 that we're talking about today that most often, working with hundreds of businesses and nonprofits over the years, that I've seen lacking. I most often have interacted with many companies that have controls on some level in place, and I would beg to bet that most companies have controls. Now, whether or not they're sufficient for their level of operations and personnel, that's a completely separate matter. But the issue is not companies not having controls of some sort, but it's quite often that they're not documented. And so without any sort of documentation, a control is really set up for failure. If our controls are functioning and they're in place, but only one person is kind of the keeper of all that knowledge, and things aren't documented in such a way that a new employee within your company or somebody in a different department that all of a sudden has to pick up the slack for an employee who's on vacation unexpectedly or terminated unexpectedly, then it's just really a recipe for disaster. So again, with this control in particular, and with all the other ones that we've talked about so far and that we're about to hit on, I just want to encourage you that not to get bogged down by the big picture, but start maybe with one process and build from there. And again, a small change can go a long way within a business. And so I don't know about you, I don't necessarily love to write. I probably love talking more than writing. And so something I do sometimes too when it comes to documenting policies or procedures or just other business related note things and notes is I pull out my phone and use the audio feature, or sometimes I'll do maybe the talk to text feature on my phone as well too. And so maybe that's something that might be useful, but what we're looking for here is not the world's greatest or most robust paper or essay or any sort of citations or anything of that nature, but we're just looking for something that's concise and simple, perhaps even bullet points. That is something that another employee outside of a specific role would be able to kind of read it and follow and know and understand what the company's standards are with regards to its processes and controls and things of that nature. And so really what we're doing here with this control by documenting things, not only are we promoting the things that we mentioned, the clarity and the consistency and accountability, but we're really building trust, both within the organization and outside the organization. Employees within an organization feel a sense of trust because they know that the company or the employer that they work for is committed to excellence, and that there are standards in place and that they don't have to have all the answers, but they just need to know where to go to find the answers and to follow the systems and processes. People outside of our organization feel a sense of trust knowing that the vendors or customers that they're working with, that they have standards and systems and a commitment to excellence and a process for doing things the right way. And so again, choose something, start by documenting one process, one policy, one procedure. Start small. Don't feel like you have to accomplish everything overnight. That's not necessarily the goal at all, but again, just getting in the game and getting started. And last but not certainly not least, control number 5, approval and authorization controls. All financial transactions should be reviewed and approved by someone with the right authority. Really, the goal of this control is just emphasizing the value of a second set of eyes throughout the approval and transaction process within a company. It doesn't need when I talk about an approval or authorization control or process, we're not looking for anything fancy. We're not looking again for the most robust authorization or approval form. It can be as simple as a manual signature, a digital signature. There are even apps that make it easy to electronically approve invoices or bills or things of that nature too, or accounting transactions. So find what works best for you, but implement a system on some level. It can be a dollar-based amount. It's something that we see with a lot of clients. Sometimes clients, instead of a dollar amount or in addition to a dollar amount, they might use an approval threshold based upon the type of expense. So maybe for a company that is more of a service-based organization and there's a lot of driving around in company vehicles, maybe employees have certain autonomy to spend on gas or food or things of that nature, kind of up to a certain amount. And then maybe some of the non-recurring expenses above X amount require approval by a manager or an executive. So again, what exactly the approval threshold or controls look like is up to you as a business leader and an owner. But again, just important that there is something and some process in place. And again, to jump back a slide, it's not only having a process, but then making sure that it's properly documented as well. And really what we're doing here, we're ensuring that funds are properly used and used within budget. And really we're catching things before they go out the door. So just a very real world example that just happened over the past week with the client that I'm working on is I make it a point with any of my clients that I have banking access is daily reviewing the banking activity just to find or locate anything that just seems off, and then I'm able to ask questions and kind of get an understanding. And so in the course of doing that, found two large transactions that had come out of my client's bank account without any sort of approval or authorization because it had not gone through our process. So we have the controls in place, the activity being reviewed, and then we have the approval and authorization controls. And because these transactions didn't meet either of those controls, it became clear and evident to us that hey, these amounts were just pulled out of our account by a vendor without any sort of approval, and that allowed us to then follow up directly with the vendor. So make sure that you're maintaining awareness of banking activity and somebody is reviewing what's going on. But again, what I really want to stress here is just the value of having multiple sets of eyes. So we talked about five, what I believe to be pretty foundational controls. So where do we go from here? Not sure where to start. And again, what I've alluded to throughout these past five controls is you don't have to do everything at once. It's more important that you get started. And so maybe it looks like picking one control this week to start. If I had to put a pulse on any of the five controls that we spoke about today, I would say without a doubt, the very most important control to make sure that you have in place first before moving on and adding the others would be the physical and digital access controls. Without our assets, both physically and digitally being secured, I don't think it makes sense to move on and implement any other control. So pick one control this week to get started on. Schedule your next account reconciliation. Again, put a calendar invite. If there are other people involved in that process, invite them as well to block off an hour or 2 hours or whatever that looks like. But get it scheduled. Review who has access to your finance and accounting systems, your online banking, your accounting software, your credit card platforms, any sort of key or significant financial systems. But again, don't just guess or have a loose understanding of who has access, but rather know who has access. And then lastly, document one key process. So again, what I really want to emphasize here is that progress is more important than perfection. So even one small change can make a big impact, and that's the tie-in to this image here on this slide. So what comes after all these controls? Well, if you're in the camp like myself that really geek out about controls, I've got good news for you. There's many deeper layers that we haven't only scratched the surface on today. And so if you are very interested, there are many more controls that can be discussed and implemented. And so know that this is not everything. This is not an all-encompassing list, but I believe that these are just very critical and important controls to consider, and that all businesses of every shape and size and industry should have in place. And so after these are in place, I would encourage you to make a habit of regularly reviewing your financial statements. And so what we're looking for here is, I think most people immediately jump to the balance sheet, the P&L, what were our revenues, what were our expenses, our bottom line, how did we do compared to last month? All of that is great. But I think there's a couple of other reports that really have potential to unlock a lot of meaning and value. And so the cash flow statement is a great report to really see how a company, sorry, is utilizing its cash. And so that's a great report as well. And maybe the most meaningful for most businesses would be the budget versus actual report. So if your accounting system might have a tool where you can input your annual budget, and then it'll show you how you're spending and what your income levels are like in real time compared to the annual budget. And so that's something important to keep a pulse on as well too. And so all these things are ways that a trusted advisor or a fractional CFO can really add value and be an asset. And so some of the things that we can help you with are understand what the numbers are telling you, staying on top of your financial health, and making more informed business decisions. And so on this slide, I've got contact info for both Will and I know I'm quite confident that like myself, that Will would be happy as well to be a resource and to have a conversation with anybody that, hey, if you want to just go deeper into some of the topics and concepts discussed today, um, or if there's any way at all that I could be a resource, that Will can be a resource, feel free to reach out. Feel free to like our company pages on LinkedIn. And I know for me and my firm, we've got some additional PDF resources that go a little bit deeper into the stuff that we talked about today. So I would be really happy to share that with anybody that might like a copy. But Will, at this time, if you didn't have anything else that you wanted to add in, would love to open up to some Q&A.
Well, thanks, Josh. I really appreciate it. And I'm going to reclaim the host title here. So for everybody that's on the call, if you can use the Q&A tab down at the bottom for questions, we do want to open it up and give everybody time to get their questions answered. I wanted to thank you, Josh, for the insight and perspective that you brought here today. As we're waiting for questions to come into the Q&A tab, one question that I had as it pertained to best practices of retaining the information of employees in the organization that have digital access to various components of the business. What processes do you put in place to help maintain that aspect? And I've kind of heard some horror stories of employees that had controls that left and tried to do damage to the business, and the ones that had controls in place mitigated those risks. The ones that didn't had kind of a big issue on their hand. So what have you put in place that maybe helps an employer to make sure they're staying up to date with that and then plugging it into their process as employees leave?
Absolutely. Fantastic question. So what I would say, I like things to be documented, of course, but I encourage employees to make it a part of the standard onboarding and offboarding process. And so most employers should have, if they don't already, a standard onboarding practice. And so maybe it looks like, certainly getting direct deposit information, if employees are paid via ACH, and getting their other tax forms and things of that nature to the employee handbook. And so that would be an additional item that I have employers build into the onboarding practice, depending on the employee's role, making sure that they are provided access to whatever platform. The same thing when employees leave and are offboarding, make it a part of the stated offboarding practice as well, to make sure that they're removed from any access. And then do kind of an internal audit, and maybe every few months or so log into some of those, whatever cadence works for the business, but log in and check and just perform an internal audit, if you will.
Makes sense. Thank you. We've got another question here that was saying, hey, we generate financial reports monthly, but don't really do anything with them. What should we be looking at to better understand our business and, how to use that information to our advantage?
Absolutely. And for those in this camp, I would say don't beat yourself over the fact that that you're not necessarily doing anything with it. I think retaining said reports is very important. I've seen a lot of instances where employers have not been retaining reports, and after so much period of time, maybe they've moved to a new accounting system, those reports are just impossible to retrieve at that point, or very hard. And so the fact that you're doing that goes a long way already. But then from there, I think again, there's a lot of value in the numbers and what they show us. And so some of the things that I look at if I'm reviewing financial reports, I certainly want to review a business's profitability and how what the balance sheet is looking like and the liabilities. But I'm a big fan of doing a year-over-year comparison where it makes sense. Obviously, if a company is starting today, it's not going to be a great comparison a year from now to compare their June 2026 operations against June of 2025. But where it makes sense, I love incorporating a year-over-year comparison when it comes to profitability and spending and things of that nature. Even when it comes to kind of the cash position as well too. One of the things that kind of one of the baby steps that I always encourage employers, sorry, when I start working with them is making sure that they have cash reserves in place. And so kind of the days cash on hand, just to make sure that there is cash in some capacity to weather any sort of potential storms that may come and often do for businesses. So those are some of the reports that I would recommend looking at. But again, very much a fan of looking at a year-over-year comparison where it makes sense.
Awesome. Thanks, Josh. Then we've got another question here. How often would you suggest review and revise of internal controls?
Good question as well. So what I like to do is, and the cadence will look different for each business or organization, but I recommend at least quarterly or twice a year. And I think why this is important is just like technology is constantly changing and there are new platforms and new tools being added daily. And I use QuickBooks for my own firm management software, and it seems like just every month or every other month, QuickBooks is rolling out a new tool or trying to change the layout in ways that just kind of frustrate me from time to time, but that's another conversation. Anyways, what I'm getting at is just like platforms and tools change, so do our controls and the way that we go about doing things. And so our teams change, our business operations sometimes change. Maybe there's a new line of services or businesses that become offered that didn't exist when controls were documented first. So I'm a fan of a quarterly, and that might be a little ambitious at a very minimum twice a year going in and kind of doing a full review and analysis and updating where necessary. And I think the important thing too is that is just doing the review. We're not looking to rewrite control documentation all over again. So don't get worried and feel like you're going to have to take the time and write all that stuff again, but just making updates where applicable. Yeah, good question.
Wonderful. Well, it looks like those are the questions. We'll give everybody else maybe one more minute if you have any last minute questions to enter that into the Q&A portion. Um, while we wait to see if any other questions come in, I just wanted to let everybody know on the call here today, we will be sending out a recording of this as well. So you'll have access to going back and reviewing the information as needed. Josh is put his contact information up and my information as well. So, you'll have the ability to get a hold of us. I'll include all of that in the follow-up email also, as well as there's one other component that I was going to give people a heads up here on. But anyway, just know that that's there, that's available if you need to get in contact with any of us. one of us can get the other person in contact as well. It looks like we've got another question that came in here too. So how often should we be reviewing who has access to our financial systems?
Yeah, so good question. And I know we kind of touched on this a few minutes ago. And so again, I recommend making it a part, like a standard part of the onboarding and offboarding. And then from there, I would suggest maybe every 2 or 3 months going in and making it a point. It probably takes all of 15 minutes at most to log in to all of your key financial platforms and just check and monitor who all has access. So I would say at least quarterly to make it a habit, but certainly also, again, make it a standard part of your onboarding and offboarding process as well.
Perfect. I think we've had, great feedback from everybody here on the call. Thank you for those that have questions. Just going to make some closing remarks. So I will say if there's any final last second questions that you want to get in there, go ahead and type them in the Q&A box. But thank you everybody who joined here today. I think this was a really important topic, something just to get focused on and understanding kind of the key action items that you can take to better set up your business for financial success. And I think these really align with the perspective that I'm having conversation with businesses today in terms of process, right? From a 401k standpoint, everything's about process, whether that's on the fiduciary side, on the investment side, communicating with employees. And so I think really the alignment there and kind of the through line is creating simple processes that can be repeatable for the business over time and just plugging those in to what you're doing on a regular basis. I would imagine everybody here is doing some sort of monthly, quarterly, semi-annually, annual reviews of their particular roles, their particular organizations, and just taking some of these easy actionable items and blending those into your processes. I think it's really going to continue to see you thrive and help the business overall from a financial perspective. So with that being said, we've got we're going to give everybody a little bit of time back here today. Josh, thank you so much for joining us here on the 2017 Impact Series. And again, you all will be receiving a recording of this email here today, and I look forward to connecting everybody. And if there are any questions that need answered, that's what we're here for. So hope everybody has a wonderful rest of the day. Thank you, Josh, for your time and that great information. And thanks everybody for joining the call.
Thank you, Will.
See everybody later.